Hey there, traders. This is Shane, and it's Wednesday night on February 9th, and I'm going to actually cover some of my own Forex trades today. And it was one of those days, sometimes once those talking heads start talking, like we had today with Ben starting to talk at 10 o'clock, sometimes the markets just keep on going. And it can be kind of volatile those times, so you really have to you keep your wits about you and focus on your charts and trying to be distracted. And that's why trying to trade a whole bunch of different currency pairs or different markets all the same day on days like this, you can only focus on so many for so long, right? The good thing about today is the Euro US dollars trade plan starts at 8:30. The pound US is 9:30. And the good thing is, when you're trading U.S. crosses like the Euro U.S., Pound U.S., you got to be very, very careful. On days like today, they're pretty much doing the same thing. Some days you will get, perhaps the Pound U.S. is moving better than the Euro U.S., maybe because, the Pound U.S. is having some action in other pairs, perhaps in the Yen or in the Swiss, the Pound Swiss. That's the stuff you pick up as you go along. And then there's days like today where they kind of go in tandem. And the problem is with that, if they're going in tandem and you're risking full positions on open trades on both pairs, and they turn around and you get taken out at full position losers, that's 4% of your count if you're risking 2%. So this is where it's got to be very, very careful. And what's great, the Euro US dollar, basically by the time the Pound US were setting up, you're risk-free in the trades, so you weren't double exposed. Is a good word for it. So I'm going to cover the Euro US dollar 5-minute chart first, and I'll check out the Pound US for you. And I got to tell you, today was done. There was more trades setting up, but you know what? Pigs get slaughtered, and sometimes you just want to call it quits. So let's just cover the charts. All right, I'm not going to go into some great big discussion about everything simply because it would take too long, and I got to tell you, I should record these when I'm trading, but that just adds another thing to worry about when trading. But so I'm going to try to go through this as best I can remember the way it was happening in real time for me. So what happened is, it's 8:30 start time, and this is 8:25. This setup comes in, but it really didn't get any legs to it. And the good thing is you can still get aboard this trade. Even better, if this trade pulls back a little bit, you can still get in them. But once these trades are underway before your start time and you come in, you maybe want to get in a pullback, but just be very, very careful. And as you can see, everything's printed out here for you. So what happened in this trade? I made a point of saying risk-free trade because we're getting into the time of 9:30, where the Pound US. So as you can see, the market gets in here at 36.54. It's around our levels. And straight to our target, which is up here at 36.72. So that's a quick plus 19. Now, the whole thing with the SST is you want to trade, for those that do. Not everyone wants to. Not everyone wants to trail. But that's the basics of the SST. And I'll be honest with you, some days I trail, some days I don't. It all depends on the price action. And you do get in on this trade here, so plus 19. And then you got your trailing up of your stop. Now, these are all covered in the trade plans, and what's going to happen as an SST owner is you get the trade plans, and it's a great starting point. I'll be honest with you, but you really want to make them your own. That's really the key to trading, right? Is to make everything your own. And I do that with my trading, especially when I'm worrying about stop placements. So what happens here is by the time we get up here to the full target here, it's a risk-free trade. There's no loss to be taken on this trade. As you can see, price just keeps moving up. It's called a trigger line. It's a way that you can trail your stop up below that, a few pips below that, and make the smart adjustments around key levels. These are the levels that I was looking at up here at 36.78. You want to take about 2 pips away, brought me down to 76. Then you have that 75 level, right? The 5 level, the 0 level. Quite frankly, on a 5-minute chart, how much weight you put into like a 5 level. But what happens here is you see what we had. We had a rally, bit of a base, and the market kind of went up to this little area here. So I just adjusted my stop around this little bottom of the base area right here, and market keeps going up. Here's a trigger line right here at 36.97. Brought my stop down to 90. Probably could adjust her a bit lower. Doesn't really matter, but that's a quite a big adjustment in the stop. What happens here is the market tries to break out to a new high. I just ramp my stop up under some of this level right here, so a plus 46. So on the euro US dollar, it was a plus 19 and then a plus 46. Now, depending on how much you're trading, that's where it boils down to. All right. For some traders, this might be a dime a pip. And for some other traders, it could be a lot of money. It all depends on your account size. So, just because you can get into the trades in the Forex market cheap as opposed to other markets, still keep in mind that in the end, the pigs do get slaughtered. The ones who just want to keep on going more and more and more and more. So treat your account size as if you had a lot of money in it that you would love to have in it. For example, pretend this is, 4 standard lots, $40 a pip up to here, right? Scale off, and then you're scaling up $20 a pip, all right? Because it's Euro US cross, right? It's a fixed $10, $1, depending on what you're trading, all right? So you're basically looking at here, plus 19, plus 46, average that out to about 32 pips, right? For this entire trade is the average. Let's say you're trading 1 standard lot, so just take the average, right? The $10. That's a $320 trade. And you'll see some more setups come in here. Here's a short that gets down to this level right here, 36.66. The low of this candle here is the 36.69. So you're 3 pips from your ultimate target. And this trade sets up at 36.96 down to here. So 6.7. It's a good size trade, right? I didn't take it, but it was there, depending on how you're trading this plan here. Okay, and like I said, these plans are available to the Owners Club. There's a whole bunch of them for Forex, there's some for stocks, and it's just crude oil, whatever you want to trade. Let's take a look at the pound US 233 tick. So like I said, the euro US dollar became a risk-free position, so it allowed a pound US position to be used as well. When you first start off with a trade, you really want to be careful and keep all eyes forward, I guess is a good way to put that, on the trades. And I don't really want to, for myself, split up what my ultimate risk is. So if I'm willing to risk 3% on one trade, I don't really want to put 1.5 on a pound US and 1.5 on a euro US dollar. It's something for me, I think about Warren Buffett, I believe, who said if it's worth a penny, it's worth a dime. And that's the way I look at it here. So this trade here, unfortunately, I got ticked out of. It set up a 60.62. I got ticked out of this trade. And I guess I could have been a little bit more aggressive. Maybe move my stop up here. But, in real time, these are tick charts, so this is moving pretty quick. And I got break even on this trade. And the trade plan calls for the 2x. I go for the 3x myself. Just a bit more stretch. And I'm not overly happy with the way I manage this trade personally. As I go through my post-trade review, what I like to do. I saw this basing sideways. I could have just tightened my stop up underneath and made a few pips on it after spread. But in the end, I guess this is just a free trade. A free trade to get stopped out on. Good thing is here, I do get this additional trade right here, and I like this. And I like this because it's a pullback, as you can see, and it's cheaper, right? The pound US went on sale. It was selling up here at 6075 is where you could have bought, but there was a sale on it, 6069, and that's something I grabbed. And let's just see how this was managed here. This is where it gets kind of confusing, and this is why I said I was glad when today was done. It was just a lot of, I think I was seeing double by the time this trade was done, because we do get another add-on here at 6080. I adjusted up around this candle right here. The high on this was 6081, so I think it was a 6081 or 6082 was the price that I was looking at here. So that's what we're looking at here. Once price got up to the 2x, call it 2x or what do I want to call these, the second target right here, and which is in this area right here. This trade's triggering in. What I did is my stop was moved up here, so this becomes a risk-free trade as well. So until then, if I wasn't able to make this a risk-free trade, would I be taking this trade? The answer is no, because if I'm risking full position on this trade and I see this one and this one hasn't, I haven't reduced my risk at all, I could be, if I'm risking 3% each trade, I'm 6% exposed in the market, and that's not something I'm a big fan of doing. But once I get reduced risk on this trade, it then opens up this possibility for this trade as well. So let's just see what happens here. Once we get up to this candle right here, scale out at plus 19 on this trade right here. This trade then flies up here for a plus 17 on one position as well. Now, once we got to this 1x here, the stop is underneath this little basing here. This is what I'm saying. You do have this line here, and this is a trail line that we can use, which comes up about 6082, around the round number of 80. I actually went to 76. Probably just tuck it down below here. I can't exactly remember why, but when you're trading the hard red at the edge of the screen, you make these decisions when you see the price action. And what's great is we had this big candle come up here and just keep on moving forward. So when we're up here, what I've decided to do on this, simply because I gotta tell you, I just wasn't 100% today, I guess. I don't know. I decided to treat them both and use the same stop on both, as opposed to managing them differently. I want to keep it nice and simple. And once I could do it, I managed to stop on both. And what we're going to get here is, once we get up to this area right here, out on plus 17, so we got plus 19, plus 17 like this on the partial position of this trade. When you get these big thrusting candles here, you can look at those as a gift. This candle's a different size than all these on a tick chart, right? So it's kind of a thrust. And then the only thing with these is, a lot of times what can happen is, the way the market is, it'll come up here. You can see there's like a shaved bottom down here. Market will come up, right? And people will be buying the break of these big thrusting candles, right? Momentum type traders stick their stop just underneath this level right here. Market will come down, take their stop, and keep on going. Right? That happens quite a bit. And I say the market, but we know what we're talking about, right? We're talking about the big players, institutions. Retail traders don't move the market like that. So stop at 6095. What's great, this candle busts above the 6100 level. My logic on this trade is, it's tucked underneath here, 6095. It broke through a key level, right? 6100 level is a key level. It's going to do one of two things, right? It's going to break up or it's going to break south. And if it's going to break south, it's going to break south pretty decent, I would imagine. And put stop there. What happens up here is we had this nice little run up here, and that happens pretty quick. This is like a 10:17, and then a couple minutes there. Once I did this, this is the trail line we can use. I want to get the stop nice and tight, and so we finally get out. I say we, but I mean me, at 61.18. So what happens on this is, on the second position is 49 pips, which came from this trade right here, and 35 on the other half of this trade. You do get some other setups down here. That this is at 10:30, and I could have traded further, but I was just done. Right? You just have to know yourself, that's for sure. 61.14 above the key level of 6100. Do you take this trade or do you wait? That's entirely up to you, but you do get a bit of a run down here that would allow you to adjust your stop. The market chops around up here a little bit, but here's the thing. Your stop's up here, and you don't get taken out. But if you see what happens here, the trade sets up here, gets taken off here, because where this candle is, it closed. Then it gets set back up here. Then it comes off. See what happens? Right? There's no setup, and you come back over here, and then you go south after 11 o'clock. And it was a nice run down, too. And if you would have stuck it out, you would have got this nice little run down here to about 60.80, 60.77. But that wasn't for me. That was my day. Let me just give you some tallies here. All right, so here we're looking at it in the pound US. Now remember, these are all partial position numbers, Okay, so plus 19, plus 17, and the trailing brought you up here, 49.35. So it's 120 pips on this, right? Scaled out positions, right? We scaled out some of our positions. So if you're trading one standard lot, now personally, if you trade 10 minis, that's one standard, and it will give you more flexibility in your scaling out. So keep that in mind when you're looking at that. So let's go with half of a standard lot. All right, so we're going to look at trading 10 minis. All right, but since these are scaled out, we're going to cut that in half. So it's on the pound US, looking at $600 and 65 pips on the EU, the euro US dollar, $325 minus spread cost of a couple of pips for the GU, and depending on what your where your broker is for the EU, you could be paying anything from 0.9 to 1.2. So overall, not a bad day. Not a bad day, and the trade plans are there for you. The setups are all right there in front of you. You're going to do a little bit of art of trading, which we call here in NetPicks. The art of trading is just making smart key level adjustments around certain levels. Today was just a really good day to trade. So far the whole week's been very, very good, actually. But the reason I want to use today's example was simply because of this risk-free trade. It's a good risk management tip that you may want to keep in mind when you're trading. All right, when you have a risk-free trade in a related pair like the Euro US, Pound US. All right, so that's it. 16-minute video. Let's cut it off here. And hey, thanks for watching.